You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Gold, crude oil, corn, soybeans, and more. With so many tradable products, the futures options market can be an intimidating place. How can you possibly keep track of the latest trading developments across so many different products? Don't worry, we've got you covered. Welcome to This Week in Futures Options, the program designed to help active futures options traders stay on top of this ever-changing marketplace. Each week, we'll break down the top trades, hot products, volatility explosions, and much more. This Week in Futures Options streams live, so be sure to check out our live stream via the Mixlr app. That's MIXLR. Or join our live chat room at mixlr.com/options-insider. Whether you're an experienced veteran or a newcomer looking to separate the wheat from the lean hogs, This Week in Futures Options has the information you can't find anywhere else. This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. And now, get ready to break down the latest futures options trading activity. It's time for This Week in Futures Options.
All right, everybody, that music means we are back. It is time once again for TWIFO, This Week in Futures Options. My name, of course, Mark Longo from theoptionsinsider.com, as well as on the network upon which all of you folks are binging. And if you weren't hanging out in the pro this week, man, you missed out on an epic volatility death match. Vol Deathmatch 2.0. Scott Nations took on our buddy, the Flow Master, Mr. Henry Schwartz, with special guest referee Dr. Vix mixing it up in there. All kinds of shenanigans unfolded. It was quite the event. If you want to check it out for yourselves, only place to go, theoptionsinsider.com/pro is the place to go to learn more about all sorts of wild exclusives we have cooking over there like that. I guarantee you, nobody else is doing Vol Death matches. Listen, this one certainly lived up to the billing. A good time was had by all, but we always had a good time on the show as well. Let's see who's joining us on the old CME Group hot seat this week to talk some futures options. I'm pleased to welcome back our old pal, Mr. Scott Bauer from Prosper Trading Academy for the first time in this new year. Wild. Scott, how's it going?
Hey, Mark, how are you? Thanks for having me.
How are things in Prosper, which for you and I is still the new year? Happy New Year to you. It's very belated.
Yes, you as well. Everything is going pretty well. I'd say it's pretty well.
All right, let's see if that holds up as we dive on into a little bit of the old movers and shakers report.
It's time to find out what's rallying on the light side and falling to the dark side at CME Group this week. It's time for the Movers and Shakers report.
All right, everybody, welcome to the Movers and Shakers report, the portion of the show where we break down everything lighting it up to the light side and to the dark side over there at CME Group this week. If you follow along on Twitter, we put this report out ahead of the show as well. And if you did that, you would see that it is mostly biased towards the green this week. That might surprise some folks, but we're heading towards the green. It is a truncated holiday trading week after all. So bear that in mind. It's going to impact some of this performance and, of course, some of the volume numbers we're going to talk about on the show today as well. That said, the largest percentage mover is to the red, if ever so slightly, this week as well. So interesting stuff. Scott, you are our guest, so you get to choose. Where do you want to start, sir, in the light side or the dark side?
Now we'll start on the dark side.
All right. Have at it, sir. The floor is yours.
All righty. So, number 5 on the dark side, corn. Down, about 1.25% or so. Consumer staples, number 4, down just shy of 2%. Number 3, lumber. What that has to do with some of the good housing numbers that came out, but lumber down 4.28%. Number 2, natty gas, which was number 1 on the dark side last week. Number 2 this week, down 6.37%. And number one, not sure that I could have guessed this one. It is rough rice, down 9.6%.
Seems like it's always a rough week for rough rice here on the show. I don't know. They can't catch a bit out there in rice land. But what can catch a bit is the light side, sir. What's catching your eye this week?
Well, number 5 on the light side, oats up 5.5%, which last week was number 5 on the dark side. Number 4, crude oil. I mean, there's a lot going on in the crude space, up 5.73%. Brent FSM coming in at number 3, up just over 6%. Lean hogs at number 2, about 7.7%. And heating oil in first place, 8.68%.
Seems like there's some action in the energy. I don't know why, Scott. What could be driving that?
I can't imagine what's going on.
We have a lot of complexes that we could talk about this week, but we have to kick things off in the equities.
It's time to explore the volatility swings, skew changes, and hot options trades in your favorite indices. It's time to talk equities.
All right, everybody. If you want to follow along with the show, head on over to cmegroup.com/TWIFO, TWIFO/TWIO will also do it. That'll get you to that report. Then in that drop down, you want to go down 4 slots to equity indexes. Then in product family, you want to go to US Index E-mini. After that, it's an embarrassment of riches. We could start wherever we want. Scott, it's obviously been an interesting start to the year in the equity markets across the board. We haven't talked to you on this show since early October of last year. So a lot has happened since then. What's been catching your eye and lighting up your tape in the world of equity, sir?
You know, a lot has happened, but when you look at just kind of the number of where we are now compared to where we were back in October when I was on last time, it almost seems like, we're near the same place, even though, it feels as if we've had gyrations and sector rotations and volatility all over the place, which we have had. But truth be told, we're kind of in the same place here. I think vol is definitely higher now than it was back in October, and we're definitely seeing some extended vol going into tomorrow and even next week in ES. And I think that's, probably rightfully so, just given the landscape of what we may get eco data wise. Obviously, geopolitically, there are some things out there. So, ES has been, in implied vol in the upper teens, actually nearing 20, and that is definitely elevated.
I know you folks have a lot of interesting trades you're always putting on over there at Prosper. Anything been catching your eye in the world of the E-mini lately?
It is that volatility, and when we saw a dip about a week or so ago, we had actually bought some put spreads, and you know what, we're looking to add on to them as vol keeps going higher. When I say add on, I mean selling something against it, because vol has popped quite a bit. ES is near the same place, maybe a tad lower than what we had bought, and our duration was out to kind of the end of March. But I think that we're getting to a point, at least in my estimation here, where vol is getting a little toppy. And even though, people may say, oh man, we've seen vol much higher than here. We don't see it trade in this range that it's in for typically a very long time. And I think it's been there maybe a little bit too long, but obviously, something happens geopolitically, we can see that change real quickly.
Well, speaking of stuff happening, a lot has been happening out here in the world of the E-mini. In fact, you would never know it's a truncated holiday week by these volume numbers. Already 2.7 million contracts, so they're making up for some lost time out there. A pretty action-packed week. As you might imagine, listeners, a lot of that action aggregating in the contracts that are expiring today and expiring tomorrow. It's all 0 day. It's all near dated all the time in the equity world. And as we're recording this today, listeners, we are seeing most of those major equity indices come under some heat. We're selling off about 0.5% in most of the major indices. We're seeing our old pal, VIX Cash, as Scott alluded to, getting frothier, vol getting back up above that 20 handle, which is certainly an interesting psychological level in the world of the equities. Scott, you mentioned put spreads were drawing your attention over there at Prosper. It's kind of interesting because that's also what caught our eye out here in the E-mini this week. Again, there's a lot of stuff flying fast and furious around the 0 day strikes, listeners. But actually, if you go out a few weeks, all the way out to week 1 March, I know it's heresy to go all the way out 15 days, listeners. But that was one of the larger trades of the week out here this week. Looks like somebody really had an eye, Scott, towards the 6,600, 6,500 put spread in March. It traded 9,500 times on Tuesday. It traded about a couple thousand times yesterday, and it going up about another 10,000 times today. So you're talking over 20,000 contracts going up in this put vertical, which looks like it was trading for around $10 on average there, Scott. So I don't know how far out you were going or what strike range, but how does the 6,500, 6,600 put spread in March for about $10? How does that float your boat, sir?
Interesting, really interesting. So my duration was longer. My duration is actually out to the end of March, and we were looking at the original spread we put on was 67.50, 66.50, and looking to add on selling a lower put spread. So actually selling a spread like this could be a real nice hedge against the long position that we have. I'm not sure I'd be a seller of this spread, this 6,600, 6,500, without having something else long against it. Sure, it's expensive, but I think you gotta have something in the tank, Mark. You know that.
Yeah, it's just kind of interesting. Everyone's got put spreads on the brain in the E-mini right now, Mr. Scott. You are not alone. The other thing a lot of people have on the brain right now in the world of equities, Scott, is this emerging, call it what you will, flight from AI, rotation out of large caps and into the small caps. So a lot of people are paying attention to all things small caps as well. Is this something you're noticing and potentially trading over there at Prosper so far this year as well, sir?
Yeah, we definitely look at RUT and we look at IWM, but when we're looking at kind of this sector rotation, it's maybe not necessarily out of AI tech to small caps in general, but to some of the staples. So that's where there's been some interesting trade that I have seen, but I know that in the RUT, I think it was in June, right? There was a big put spread that traded that somebody bailed out of. I want to say it was 2,500, 2,000 put spread. So, it's the volume is not just limited to the ES. It is across the equity space. And it's interesting to see some divergence in the NASDAQ and the RUT versus what we're seeing in the ES.
Yeah, it's been a very interesting stuff out here of late, and that continues again this week, listeners. If you want to head on into the Russell 2000 on that report, you'd see it's actually a decently active week there as well. You wouldn't know it's a truncated holiday week. We're seeing about the same amount of volume we would expect to see this time of the week, a little north of 20,000 contracts. So interesting stuff out there. By the way, if you're wondering vol-wise, we're just talking about E-mini vol getting a little bit spicy, getting north of 20 handle. Small caps usually structurally more volatile. At least that's how it's supposed to work. And if you're wondering what is small cap vol, if you go out about a week or 2 weeks, it's about in the 25 range. So 24 to 25 range. So some premium, not as much of a premium as perhaps you might expect, given how much movement we're seeing out there in small caps. And as Scott alluded to, everyone apparently does have put spreads on the brain this week, because that was the largest trade we noticed out here in the small caps this week as well. Went up yesterday almost 600 times. So you're talking almost 1,200 contracts total, which again, you're doing 20,000 contracts in a week. 1,200 is a large trade. And it was the June, so going all the way out to June, which again, an eternity in the world of equities these days, listeners. The 2,500, 2,000 put spread. It's like somebody took it off nearly 600 times on Wednesday. So again, kind of a wide one. We were talking a pretty tight put spread in the ES, and now we transfer over to small caps, 500 handles. That's a pretty wide spread. You might say, why are you even bothering with the 2000s? But there's maybe some method to the madness. I hadn't had a chance to dig in and find some prices out here. Obviously, it's going to be a pretty wide spread, so bear that in mind. But interesting stuff out there. So apparently put spreads on the brain in the world of equities out here this week, listeners. We can probably talk equities the rest of the show, but there's a lot going on in a lot of other complexes, and I'm sure Scott wants to talk a little bit of energy, so let's head out there next.
It's time to tap into the deep options well of black gold, Texas tea, nat gas, and more. It's time to talk energy.
All right, listeners, pop out of that equity indexes drop down. We're going to energy. It's an alpha order list. You're just moving up one slot. Nice and easy this time, listeners. And then from there, we have an embarrassment of riches. On the product front, we can go to WTI. We could go to nat gas, both very active, even heating oil if the mood strikes us, or Brent. Scott, what's catching your eye in the world of energy these days?
I mean, no question, you have to look at crude, breaking out of its range, breaking above the 200-day moving average. How much of this is because of what's going on with Iran? How much of it is technical? I think that, President Trump just gave another 10-day timeline or something. If things calm down, which we all hope they will, and there's some sort of agreement, I think we can see crude down 5 to 10% pretty immediately here. I do think the overriding economic theme of supply and demand, we're still getting way more supply than there is demand, but there's always that geopolitical risk that can push those prices up. And that is certainly, kind of rearing its ugly head right now, if you will.
It does seem like we are heading for an inflection point this weekend, one way or the other, whether it's to some conflict, unfortunately, or which would obviously send things skyrocketing, or perhaps to the negotiation table, which would be a better thing. Obviously, it would take prices lower, and we are seeing a lot of that reflected in WTI right now. Again, you would never know. It was a shortened holiday week, closing in on 750,000 contracts already in WTI. So WTI is hot out of the gate this week, listeners. And it looks like, interestingly enough, with all the action going on and all this talk of inflection points coming up, maybe even this weekend, a lot to pack in, but it's actually the May contract that has about 56 days to go. That's where the largest percentage of the flow, about a third, 33%, going up in the May contract. So kind of interesting. Again, going to be a little bit surprising to folks who are living that 0-day life in the equities, and to a lesser degree in the energy space, going out 56 days. If you're wondering, what is the vol right now in the May WTI contracts, at about a 48.5, up nearly 10 points this week, 9.8 points. So clearly things are getting juicy out there in WTI land. Skew-wise, also reflecting that something is afoot out there. Last week, the calls were 18.4% bid. That is pretty rich. They are still pretty rich this week, but they have come back to earth ever so slightly. Still 13.2% bid. I'm not sure if you can call that back to earth at the end of the day or not, but they are lower than they were this time a week ago. The puts last week, nobody wanted them. They were 6.7% discounted. This week, they are still discounted, 5.8% discounted. So kind of interesting. Vol getting frothy. The calls still impressively bid, if coming back down a little bit from last week, and the puts still discounted. So I suppose if you think this is all much ado about nothing, maybe you want to take advantage of a little bit of that put skew to get a little bit of downside. Now you are paying a higher total vol level for that, so bear that in mind. But it seems like, Scott, all anybody wants is some upside right now. It's the May 80s that were dominating the tape out there this week, listeners, changing hands 44,000 times. That's a lot of May 80s changing hands. Looks like the big day was actually yesterday, 27,000. There might have been a 80, 85 vertical changing hands yesterday, or either way, just a lot of action on the 85s as well. They traded 21,000 times against about 27,000 of the 80s, opening on both. So looks like it could have been some vertical action. Then we're seeing more action in the 80s again today, about 14,000 already today, 2,800 on Tuesday. So, and about 8,000 of the 85s today. So if they are trading verticals, they are also trading some extra 80s, maybe on a bit of a ratio. Scott, May 80, maybe the May 80, 85 vertical. Either of those float in your boat, sir?
I'd rather be a seller of that spread. Honestly, I wouldn't sell the 80s outright. I'd rather be a seller of that spread, just based on where crude is now. Obviously, we can see a big pop, but where crude is and where that vol is. So I am a firm believer that if we don't see that acceleration, and people are may say, "Oh, Scott, we're going to happen. Something's going to happen." Okay, that's why you trade a spread. That's why you're always kind of stopped out. You know what your risk is. If we don't, I can see us again. I see crude 5-10% lower pretty easily.
Also, some action in the April 70s. It's kind of a pick your upside strike. There's action in those, about 11,000 of the 75s in June, also trading this week as well. So action on a variety of upside and a little bit longer term strikes. Again, the 70s expiring in April, so about 26 days. Those doing about 20,000 contracts this week as well. Again, the big day also yesterday. Looks like about 11,000, also about 11,000 of the 75. So maybe some more upside vertical action. If that's the case, a lot of people like $5 verticals in WTI this week, which is kind of interesting. About 20,000 of the 70s have traded this week and about 19,000 of the 75. So it is potentially, again, some vertical action, 70, 75. I don't have prices on the vertical, but I do have the 70s. Actually, no, I do have the price on the vertical. This vertical was 69 cents. And the 70s by themselves straight up were trading for about $1.75 today. So, Scott, maybe that's a little bit, obviously you're not getting as much duration, but you're getting a much closer to the fire strike. Maybe you prefer the 70s straight up for about $1.75 or that vertical for around 70 cents, sir?
Now you're talking. Now I'm interested in buying that vertical. Like you said, a little closer to the fire, 70, 75. That interests me quite a bit. And in fact, you put those two together, maybe buying that April and then selling the higher strike May spread against it. I know that's kind of a short time spread, if you will. I got to look into that. That looks really interesting to me.
Maybe that's what they were up to. They were all trading mostly on Wednesday yesterday. So maybe someone was selling an upside vertical against that meatier, closer to the fire vertical out there. Really quickly, we also saw some action on the June 75. So if you want to go farther out in time and maybe split the uprights between the 70 and the 80 handle, the June 75s are your Huckleberry listener. They've traded about 12,000 times this week, including about 7,000 today, listeners. So a fair amount of action on these 75s. Looks like it was kind of back and forth, though. Maybe potentially closing yesterday versus opening today. I don't have prices on these. Let me look here really quickly. I don't have prices on these June 75s. I have June pars and June 65s for $4.42. For whatever reason, not seeing the June 75s on my screen. But yeah, so a lot of interesting stuff. And again, mostly upside. Are you down for that, listeners? Or would you maybe be trying to fade this recent build up and perhaps taking some downside. Bear in mind that if that does come to fruition, we are going to see vol crash back to earth as well. So if you're shelling out for any sort of premium, just bear that in mind. Maybe sell something else against it to insulate yourself against what could potentially be a bit of a vol crash if they do come to the peace table over there in WTI. Scott, anything else catching your eye in energy? Would you like to move on to another complex, sir?
We can move on, but I think it's fascinating to look what happened in natty gas. Where we were, 2 weeks ago, 3 weeks ago, right when we had the cold snap, and now to see what's happened over the last several weeks, last week. So it just goes to show you on a dime how a market can change.
I was joking about this with our guests on this show last week and on our Futures Rundown show yesterday. What's the textbook play in nat gas, right, Scott? You buy some upside, whether it's futures or just calls, heading into the cold spell, and then you bail on it the second the warm weather, or the warmer, I should say, weather starts to hit. And usually that trade shouldn't work because everyone knows it's coming, right? It's already priced into the market.
Yeah.
If you do that trade, it shouldn't work out. If you did that trade this year, you hit a home run, sir. So it's kind of wild.
Yeah, grand slam.
Yeah. It's the most cliche trade in the nat gas book, and yet it knocked the cover off the ball this year, Scott.
when is the last time, and even if you exclude this, that massive spike at the end of January, okay, when is the last time you saw this kind of range so quickly here, and the volatility behind it? I mean, that is something very, very noteworthy.
You got to go back to the Ukraine invasion probably, and that big spike to the upside. We stayed up there for a little bit, though. We didn't come crashing back to earth as rapidly as this. But yeah, just absolutely wild stuff. Since nat gas is on the brain for a lot of people and it continues to dominate our movers and shakers. Interesting week, because not many weeks we see WTI putting up more numbers than nat gas, but that is the case this week, 652,000. So pretty much 100,000 more contracts going up in WTI this week. Shows how much interest and or concern there is in the crude market right now. But nat gas, as Scott alluded to, just falling out of bed, off another 25 cents just this week, or nearly 8%. Shy of the 3 handle again, 291. And of course, it's back on our movers and shakers this week as well. If you go back to the end of our show last week, it's off about 6.33%. So just a wild time in nat gas. And again, one of the few times I can think of where if you did that, the most cliche nat gas 101 trade, you did all right. You did very well. So wild stuff out here in nat gas. Speaking of wild stuff, are we seeing some wild flow out here this week? The answer is, looks like most of it, 43.5% to be precise, is going up in the March contract that has 5 days to go. So fairly near dated for all things nat gas. If you're wondering what is the vol right now, again, nat gas usually is dominating the tape from a volatility perspective on our list, and it's pretty much up there again right now, 78.33. That shows you also how wild it was when we had silver trading higher vol levels than nat gas. They're hanging out about a similar level right now. Absolutely wild stuff that silver is even in the same conversation as nat gas from a vol perspective. Shows you how aberrant that move in silver was. Coming in 10 points on the nat gas vol this week, but still hanging out at a 78.33 in that March vol. So again, showing you things are still rich in nat gas land. This move, as Scott laid out, is pretty sizable. And maybe if you think it's overdone, maybe you want to take advantage of what you're seeing out there. Looks like some folks might be beating you to it. The calls last week were 14.5% bid. They are nearly 20% bid this week, 19.5% bid. So that is a nearly 20% premium over an already high 78 vol, listeners. So you're paying some juice for that upside this week. The puts, nobody wants them anymore. 7.9% discounted last week, 14% discounted this week. So maybe, dare I say it, maybe we have hit that inflection point for a little bit. Maybe we're going to settle out, maybe even rebound a little bit off these levels. The skew certainly doesn't seem to be pricing in a heck of a lot of downside in the near future. Maybe part of that is because everyone wants these 3 halves expiring in March. That was your option of the week out there, listeners. Trading pretty actively every day this week. 12,600 so far today against an OI of about 28,000. About 11,000 yesterday and 12,000 on Monday, opening every day. So folks, still very active in the three halves. You'd think if you were long these, maybe you'd be bailing on these. There'd be a lot of closing paper. It doesn't look like from this skew, doesn't seem like they're overriding these. It seems like they're probably buying them if that skew continues to get bid up. So kind of wild, Scott. I don't know. We're seeing nat gas continue to fall out of bed, and yet we're seeing a premium to the call wing and a lot of 5 day to go, 3.5 calls lighting up the tape, sir. What are your thoughts?
Yeah, not only the three halves, but look at the fours, or excuse me, the 3 3/4 and the fours also. Open interest is huge on both of those. I don't know. Are we supposed to get like Armageddon snow coming
Yeah,
out?
is there another polar vortex? What the heck?
I don't know.
What would get us to a 3? What would even threaten a 3.5 strike in 5 days? That talk about another move. That would be a hell of a move.
I mean, I don't know. I don't know. I look at the forecast here, and typical, actually warmer, much warmer than typical weather here in the Midwest. I know out west they had some pretty big storms, but those are gone. I don't know. I don't see what could really pop this in the next 5 days.
This is not what I expected to be seeing, but that's why we crunch the numbers and do the show at the end of the day, Scott. So interesting stuff. Scott is right. Fours trading about 24, almost 25,000 times this week. 24,000 times of the 3/4. Doesn't even line up like a fly. If it was 3/4, 3.5, 4, it still doesn't even line up. And then about 16,500 of the 3 3/4 this week as well. So wild flow out here this week. I guess if you had a lot of 5 day to go upside in your back pocket, you are watching the nat gas market. And Scott, we said we haven't had you on since October of last year. And that's pretty much right before the wildest leg in the metals kicked off. So we got to get your thoughts on that.
Werewolves beware. It's time to explore the options activity in silver, gold, and other shiny things. It's time to talk metals.
All right, listeners, go into that drop down, pop out of the energy. You're going to go all the way down to the bottom of the list to metals, listeners. And Scott was on with us early October 3rd, I believe it was, of last year. We had silver and SLV hanging out at about a 43 back then, listeners. It just seems like a different time frame entirely. Scott, I was joking on the last show we did. Everyone's an amateur metallurgist now. Everyone's all into the metals. It's been a wild time. I don't think I've ever talked about the metals as much as I have since the last time you and I chatted. It's been all metals all the time. Anyone wants to talk about in every show is metals. Again, we had, silver vol in the triple digits, so that's going to attract a lot of people who don't normally trade in the metals. Wild stuff. I'm sure this hasn't gone unnoticed over there at Prosper. What are your thoughts on this wild roller coaster we've seen in the metals since the last time we chatted, sir?
I mean, it was, we got to the point where this was trading like a meme stock, whether you're looking at silver, gold, even some of the other kind of precious metals. It absolutely was looking like a meme trade. And if you were, kind of trading it intraday back and forth, I think, you had the opportunity to do really well. If you were just kind of buying in on the momentum, it did well until it didn't, until you really got your handed to you. To me now, the markets, obviously, they've calmed down quite a bit since then, which I think is better for the overall market to get it out of that FOMO, that meme craze. I still believe that gold is in a buy the dip phase. So just like we saw for the last year, 18 months, anytime there was a dip, and whether that dip was down to some technical level or not, it was a buy the dip. Little bit derailed at this point. I still believe it's there in gold. Silver, not so much anymore. I think that big rush that we saw, I think enough people got burned over the last several weeks or so to kind of rethink that trade. But it was certainly a crazy trade. And again, I mean, it was like a meme stock. It really was. And to think that silver or gold could trade like that, I mean, I would not have had that on my bingo card.
No, it's absolutely wild. We were talking about some trades to the upside towards the end of last year, like 60 strike, and we kind of laughed at it. So that's insane. You know, we were hanging out sub 40 at the time, and then blew through 40, blew through 60, blew through everything else above that, and got into some wild territory. I have to imagine there were so many people getting lured to the dark side by that triple-digit vol in silver. Were you folks tempted over there? Prosper? Any put spreads or anything going up over there?
So we trade it more as a proxy in some of the ETFs, rather than just outright in silver or gold. And we definitely have been active. We definitely been trading it up. Mostly though from the long side on some of the dips, really not initiating shorts. But there was no question, you know, the Monday morning quarterback in us, the shoulda, woulda, coulda trade. You know, you look back and say, "Oh man, that was a layup. That was the easiest time ever to fade that," right? But easy to look back and say that.
It wasn't cheap too. If you wanted to buy some puts on that you were
No, it was not cheap.
You were paying.
You could have bought puts.
Yeah,
you could have bought puts, and unless you bought the right ones, you know, because of where the volatility was, you may not have done so well. Actually,
no, you still lost money unless you were really aggressive with your put buy. That was a hard one. Yeah, that was just wild stuff. And a lot of people who are seasoned metals traders who this year just said, I've washed my hands of it. It's too wild. It's a market for crazy people now. To a degree, that is the case. Let's see what we're seeing out here in silver. Everybody wants to talk silver these days. Gold, a secondary concern in the metals world right now, which is again kind of wild. Shows you how much the tables have turned out there this year. Silver, again, a truncated holiday week, so putting up 27,000 contracts. We have seen some of those increased margin levels, maybe hitting some of that volume out there as well in silver. And of course, as Scott mentioned, people obviously blew out or just took their ball and went home, given how wild things have been out there of late. So all that aggregating to a little bit lower volume levels out there right now. Silver, as we're coming into the start of this segment, 77.60. Off about 31 cents, or about 0.4%. So kind of a bit of a actually quiet period for silver. We used to, and you know, just a few weeks ago, we were seeing it move 3, 5, 10% a day for a while there. So 0.5% in a week is, dare I say it, mild. And the most action this week, again, going out to March, so 5 days, 33% of the flow going up out there. And there's some action. Well, there's a couple of things that are kind of vying for the crown. The number one most active contract is actually a little bit farther out, but let's go to the March first. By the way, if you're wondering, vol right now with about 5 days to go. So the exact same time frame we were just talking about in nat gas. We said nat gas at about a 77, 65 right now in silver, off about 1 1/3 points. So again, just the fact that silver is even remotely threatening nat gas vol shows you what kind of rarefied air we are in. But the 85s trading this week in March, going away in 5 days, listeners. They went up 1,100 times on Tuesday, and then a few hundred times the rest of the week. So total of about 1,300 trading this week. So maybe you think the 85 handle is back in the offing in 5 days, in which case maybe you like these. Again, not a lot of time to work, but we have seen silver do some wild things. And then if you get a little bit farther out, listeners, the actual number one most active contract in silver this week is actually going all the way out to April. So that's about 35 days, listeners. The vol out there, a little bit juicier, 67 1/3, up about 2 1/4 points. And it's the 125 calls going up 1,662 times this week. In fact, if you dig in, looks like it's a 125 140 vertical that traded a little over 1,600 times yesterday, all opening. If you're wondering, prices for that, about 15 cents. Again, it is pretty far out of the money, so you're not really getting any meat on the bone for that thing at all. But there you go. You're getting a little bit of time, 35 days. I don't know, Scott, does that float your boat as a bit of a YOLO flyer, the April 125, 140 vertical for about 14 cents, sir?
No, I'd rather be much lower strikes, pay a little more.
It's all about the YOLO trades these days in the metals.
I know there are a lot of YOLO trades out there. There's a lot you can, there's a lot you can look at, and when people see prices, something like that at 14 cents, or oh wow, look at the upside there. But kind of like what we were talking about in crude earlier, I would prefer those lower strikes that are not quite as far out of the money and pay up a little bit more.
Well, we got a little bit more show left, Scott. We got time for one more complex, potentially. So where should we hang our hat last on the show, sir?
Oh, we just covered the metals, which was all the rage over the last several weeks. We can talk about the ags, which I know, there's some moving in both on the light and the dark side there. That's not my specialty, but I am happy to dive in if that's where you want to go.
All right, we can finish it up with a little bit of the old ags.
It's time to get our hands dirty exploring the latest options trades and trends in corn, wheat, soybeans, and more. It's time to talk ags.
All right, everybody, pop into that drop down. You're going to pop out of the metals, and it's an alpha order list. You're going from the bottom of the list of metals all the way to the top of the list, which is ags. And then from there, again, we do have an embarrassment of riches there as well. Oats, unfortunately, doesn't really trade that much, or we could sink our teeth into a little bit of oats, up 5.5% this week. Lean hogs going to the livestock side, up about 7.7%, kind of a wild market there. Rough rice, not really an option story, but they continue to kick the tar out of it, off another 10% this week. And then corn, the big dog in the ags complex, taking a little bit of a break this week, off 1.25%. Of course, soybeans have also been all the range out there these days, as everyone is fixated on the China soybean trade again. So which of those draws your eye, Mr. Scott?
I'm going to say we're not going to talk about rough rice. Let's look at soybeans.
All right, to the soybeans we go, listeners. Again, go into that ag drop down, go into grains and oil seeds in the product family. They're going to go down about halfway down the product list to soybeans. Obviously, there's a variety of different soybeans products. There's the meal, there's the oil, there's even the crush. But we're going to talk about the beans proper. Hanging out right now, 1141.5, up another 8.5 handles, or about 0.75% this week. Kind of a bit of a muted week compared to some of the other upside we've seen in soybeans of late. We had Kevin Green here on the show last week talking a lot about the beans. It's been an interesting trade. Whenever China's talking beans, this trade gets hot again, and that seems to be the case, at least for right now. Putting up 180,000 contracts. Again, a shortened holiday week, but decent flow nonetheless. And it looks like the lion's share of the paper out here, again, the ags, a little bit different from the 0-day obsessed products we tend to talk about a lot here on the show. Ags, different rules of engagement. They have planting, they have harvesting, and we're seeing about 27% of the flow go up in the May contract right now. That has 64 days to go. When's the last time you heard us talk about a 64-day trade in the equities? It's not very often, listeners, or in most of the other products we talk about, with the exception maybe of metals. But that's what we're seeing out there this week. By the way, if you're wondering, what is the vol in soybeans right now? 17.5, up about 1/3 of a point out there in the May contract. So it's not a silver or a nat gas, but it's certainly not a FX or a rates either. Skew wise, we are seeing a nice bid sneak in to that call wing. They were 2.7% bid last week, 8% bid this week. So getting a little bit of juice to the upside. The puts last week, 0.8% bid, so pretty much flat last week. And then 6.5% discounted this week. So you know what? You see a discount to the puts, you see a bid to the calls. That sounds like a nice little setup for a collar to me. And the ags usually do tend to work out that way a lot. So maybe if you're intrigued, you want a little bit more risk mitigated way to take a nibble on the beans, maybe a collar is in your near future. And looks like, let's see, what was like I said, about 27% of the flow going up in May. And it looks like the hot option, though, is actually not in May. It was in April with about 36 days to go. And it was the 1100 puts. So a roughly 50 handle out of the money put going up 5,562 times. Looks like the lion's share was on Monday. Looks like it might have been a par 1100 put spread going up a little over 3,000 times, opening on both legs. We saw another about 1,000 of the 1,100 puts trading on Wednesday, slightly closing, and then 1,100 again today. So there has been more action since that put spread potentially traded on Tuesday. A lot more action on the 1,100 since then. So a kind of interesting stuff there. And then in our most active month in the May cycle that has about 64 days to go, the hot option are actually the 1080 puts. So a lot of downside here dominating the tape in soybeans this week. Maybe some folks thinking this China-driven pop is overdone, maybe headed for a bit of a downturn. We have about 4,300 of the 1080 puts going up this week, and about 4,300 as well of the 1,100 puts going up this week. So maybe a tight put spread. They traded about 1,500 times each on Monday, both opening, and about 2,300 times each on Wednesday. So it does seem, and another about 500 times today. So it does seem like they are trading very tight 20-handle put spread here in May beans as well. Scott, I know you're not an ags guy, but what are your thoughts in general on the nature of the China soybeans trade? It does seem like it kind of simmers there, doesn't really do much, and then it gets really hot for maybe a week or two. It happened towards the end of last year, then it really quickly cooled. Maybe now we're in the that phase again, or maybe given all this put flow, maybe you think we're heading for the downside again.
Yeah, we definitely see that cycle, and it's not just the ags when we're talking about China. I think it's energy as well. We'll see reports come out about the economy and things pick up a little bit, and then maybe we see a little pop, and then we see okay, numbers are below what was expected, and we see a little drawdown. I think we're in one of those times right now, especially with soybeans, and I would expect that to turn, but it's sometimes difficult to read the tea leaves of some of the eco data and some of the news that comes out of China. So I think kind of that old saying, buyer beware.
Buyer beware indeed. Unfortunately, that music means we're out of time for the TWIFO program this week. But before we go, Mr. Scott, if folks are intrigued, they want to check out maybe some equity put spreads, maybe they want to talk a little energy, maybe they want to play a little bit of silver, where should they go? What should they do, sir?
Just look us up at prospertrading.com, and you will have interaction with myself or other professional traders all day long while the markets are open.
There you go, prospertrading.com to learn more. And of course, where to go to learn more about all these products and a whole bunch more we don't have time to get to on the show. CMEgroup.com/TWIFO, TWIFO, or /TWIO, TWIO, to kick the tires and light the fires. That is going to do it for us on TWIFO this week. We'll be back again after the closing bell later today to break down all the action in the options market on the Hot Options Report. So stay tuned for that. Yet another reason you should be subscribed to the full network. Back again tomorrow talking vol with Dr. Vix. Has he recovered from his special guest duties on the vol death match? I know our buddy the Flowmaster had to take the day off today. He's recovering from his wounds. It was a wild time out there, but we'll see if Dr. Vix is holding up tomorrow on Volatility Views. Back again for the pro folks after that for Options Oddities. Yet another reason why you should be checking out the pro. Then we're back again next week, all the way through to next Thursday, another episode of This Week in Futures Options. Stay safe out there, everybody.
This Week in Futures Options is brought to you by CME Group, the world's leading and most diverse futures and options exchange. CME Group's markets help individuals and businesses around the world manage risks and seize opportunities. CME Group offers the deepest and most liquid options on futures across all asset classes, including interest rates, equity indexes, foreign exchange, energy, agriculture, and metals. For more information and educational resources about futures options at CME Group, visit cmegroup.com/options. This broadcast is intended for informational and educational purposes only and does not constitute trading advice or the solicitation of purchases or sale of any futures or options. The rulebook of the applicable exchange should be consulted as the authoritative source on all current contract specifications. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.